Well, happy weekend there, everybody. This is Rob Reinhold. I'm joined by Ankit Sharma. This is the Currency Room. Let's get into it. We have one more week to add to our pip count for the month of October, so let's jump into it. In this session, we're going to be talking about the news of the week. We're going to go over everything that happened. We're going to look at some of the trends. We're going to break down every single currency we trade from a +3 to a -3, and that tells us what we're going to pair up to trade.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
All right, let's start off with equities. We ended at all-time highs on the S&P and the NASDAQ. Everything broke out really nicely. We spent 4 days basing. And if you remember last week, I said, I expect there to be little to no movement Monday through Thursday, and then a big move on Friday. And that's essentially what we got. We have volatility that's low and it's still falling a little bit. So this is clearly still a bull market in equities. When we take a look outside of equities, we see that the dollar and the yields are both steady. And by steady, I mean stronger than they usually would be. With this CPI report we just got, the odds of a rate cut are at 97% for this meeting that happens this next week, and 96% for another cut in December. So 2 full rate cuts this year, and the dollar and bond yields actually went up. But bond yields were sideways and the dollar went up. So it tells you that the market already anticipated this, it's already priced in, and we're going to need to see more than what is already expected for the dollar and the bond yields to go lower. And then cryptos seem to really just be stuck in a quagmire. They're not going down, but they're just sitting there doing nothing. The whole rest of the market's going crazy. Gold was hitting new all-time highs. Everything's hitting new all-time highs, and crypto really underperforming. So we'll take a look at that. But until that changes, I think you've got to be very wary of the crypto market. This week was inflation week, and it was higher than expected inflation until Friday. So we got New Zealand CPI hotter than expected. The Kiwi got a little bit of a bump off that. The Kiwi's been the worst currency for the last couple of months. It got a little bounce on this. Then we got the Canadian dollar. Again, stronger than expected on inflation. The CAD got a little bit of a bump as well. And then we got lower than expected inflation out of the UK, and the US lower than expected inflation. So definitely uneven inflation around the world. But I think the trend is that we are at the high end of the middle range. We're elevated, but we're not really racing higher. So I think the equity traders are looking at that number saying, hey, you know what? We're pretty okay with that because GDP for the third quarter is estimated to come in at 3%. 3%, think about that. We're in a 3% GDP growth in the US with, 2.5%, 3% inflation. That's not a bad backdrop, and that's why the market is going to new highs. So let's take a look at the numbers of what happened last week. As I mentioned, all-time highs on equities. So we got the S&P up 2%, world markets up another 2%. Crypto, on a week where the markets go 2%, crypto should be up 4 or 5%, and you can see it's just languishing. Gold, I was actually down for the week, but as you can see on the chart here, took a real nice shot, a new all-time highs, and then we backed off of that. And then oil did get a bounce, and this came from additional sanctions on the 2 major oil companies in Russia. So the rest of the market said, let's take those prices up because there could be less oil on the market. Coming into the chart in the S&P, just a beautiful chart. This is just a beautiful, beautiful uptrending chart. And we paused at resistance here for about 4 days, and then we broke out to the upside, and we've got a nice expanded range candle. But we consolidated for about 3 weeks. We're breaking out to new highs. Anyone who is a follower of technical analysis will tell you, oh yeah, this is simply just a breakout to higher highs. Yeah, If you don't believe it, it means you have a bias in you that you need to get rid of. Look, I don't want to be bullish. I don't. I'll tell you that right now. I would much rather be bearish. I feel bearish inside. But guess what? My trades have to be on the bullish side. They have to be. If not, I'm just guessing and trading my own opinion, which is my own feelings, which is a terrible way to trade. This is a breakout to bull market. Okay, do you have anything to add to that?
Rob, I'll agree 100%. And how many times end up disagreeing with the markets, but at the end of the day, price action is the king. So, I think this is just a good example of where we have to put our biases aside and just follow the price action. And right now, every dip is getting bought, which means that there's a lot of people sitting on the sideline. And again, that is a good tell where the markets would like to go make a higher highs. So I think that's a good example that we can take in any technical analysis where when the price action tells you a different story, usually that's what really proceeds.
And as you said, the price action is ultimately right. And remember, all we're trying to do as traders, we're not trying to be intellectually smart. We're not trying to be the smartest people out there and be ahead of it things. No. We want to be on the right side of the trade. And I'm going to tell a story. You've probably heard it before, but I love telling the story. It was about 25 years ago. I was arguing with one of our traders, Joe. And I said, Joe, but I know I'm right. I know the market's going against me, but I know I'm right. And he looked at me and he says, well, I don't care. I don't want to be right. I just want to make some money. And I realized at that point what he was saying was, I don't have an ego. I just want to be on the right side of the trade. So I'm going to take the other way where the market is going, and you can sit there and fight it all you want, but I don't care. I just want to make money. I love that saying, and I love to tell this story because it was at that point I realized that my ego, my need to be intellectually correct, was larger than my desire to actually make money at this business. And I realized, hey, you got to put that away. If the market's going up and you don't feel like it should go up, go long anyway. Let's jump into the movement in Forex. We liked the yen short, and boy, did that come through. So yen short was our number one trade to the upside. So great job for all the traders who short yen. Now, for me, my favorite long was the pound. And you can see the pound was the second worst currency. Now, the pound was the best performing currency until that CPI report came out on Wednesday, and then that really killed it. Euro currencies, holding in there. Again, holding in. Remember, Euro currencies, when they should go down, they're holding in. Now, yes, we did get some rotation to some of the growth names. We'll take a look at these. The big question is this the start of something? These three currencies have been really underperforming in a bull market. They actually had a nice move last week. The question is that going to continue? We'll take a look at that on the charts. Here we have crypto, Bitcoin up a bit, Ethereum down. Again, it's just, this is not any clear signal to anything. We'll take a look at the Bitcoin and the crypto chart here in just a second. So we already took a look at the S&P. Let's take a look at that crypto basket. So these are the four cryptos we trade, equally weighted against each other. And you can see this chart is not saying you want to be long. In fact, it's really just in this range here. Now take a look at the upper and lower shadows. All right, now this is a difficult situation because we all love when things break out and runs and just gives you nice green or nice red candles. We all love that. This is telling you that, hey, this is a tricky trade. Don't grab breakouts. Don't grab breakdowns. You really need more candles to really confirm something. So I don't like chasing crypto at all because every breakout or breakdown has failed and retraced. Until that changes, I am just not interested whatsoever. Here are the bond yields. And you can see bond yields on Friday after we got that CPI report really just held up there at 4%. Now, 4% is significantly lower than we've been. We've seen a downtrend in bonds for sure, but we have not seen the dollar weaken as we made this new low in bonds. Again, that's very telling here. As I mentioned earlier, here are the rate cut odds. This is the probabilities for the next meeting. you can see 97%. Here is the odds for the December meeting. You can see 96%. So basically the market is fully priced in, which means that there shouldn't be any more buying or selling based on rate expectations because it's already fully priced in. What this means is if there's a change to this, then it's going to have to be repriced. Everything's going to have to be repriced. I don't think we'll get a surprise from it. I think we're definitely going to get a rate cut this next week. And let's take a look at that. That meeting is on Wednesday. So we get the FOMC statement, 25 basis points is priced into the market. Are they going to give the market what it wants that says, yes, we are going to cut again in December? Remember, that's what the market is now pricing in and expecting. If the Fed backs off of that, it could be a little bit of a problem, but it doesn't seem like the market cares much anymore. The market is really in the space where it just keeps going higher regardless. And let me bring in one thing that happened this week. And Anka, maybe you can pipe in on this as well. On Thursday, it was on Thursday. Actually, it was on Wednesday after the close. President Trump announced that they were canceling tariff talks with Canada because someone posted a video that he didn't like. I checked the futures. As soon as I saw that, I said, oh man, the futures are going to be tanking. Didn't move, not a tick. Not a tick. It's because the market is now completely discounting everything that is said on tariffs because everything gets walked out. It's the taco trade. Anka, were you surprised that the market didn't even flinch a bit from this Canada tariff news?
I mean, not at all. Like we did notice the initial move. Like we saw a dip in the Canadian dollar. But the theme that we have seen, and this year is a great example where we started off this year with a lot of scare. And that really took a big grip hold on the markets. But now it seems like there's a fatigue on that trade, which means that you might see initial move, but there probably be no follow through, which is very contrarian to what we saw early this year. So I think as we get these kind of news, you have to really look at it from a bit of an idea that, hey, maybe there's no follow through on this one. So I think that's really where we are. We're getting that fatigue on the whole thing. Market, it's more like market already expect what's going to happen. So I think that will probably continue. But yeah, the impact of it. I mean, if the same news had come like back in February and March, we would have seen dollar CAD move like 1%. But guess what? Yesterday, maybe it's time. Maybe there was a small move like 30 pips. That's pretty much it. So again, that is telling you we're follow through on these kind of news probably would not be there. So I think you really have to kind of stick with the direction overall and then use just these little dips that happen on the news as a bit of a buying or selling opportunity.
Thanks, Ankit. Take a look at this week. This week is all about central banks. We have 4 central banks from Wednesday to Thursday, all within 30 hours of each other. Starting off Wednesday morning, we've got Bank of Canada. They're expected to cut by 25 basis points. Then we hear from the Fed. They're supposed to cut 25 basis points. Then we hear from the Bank of Japan. They are not looking to have any cuts. We'll have to see what happens. There is a new government installed in Japan. We'll have to wait and see what happens there. And then we have the ECB. No rate cut expected from the ECB. Outside of that, we do have some inflation news out of Australia. If this can come out hotter than expected, like the Kiwi did, I do like the Aussie Kiwi here. If we stay bullish in the markets and we get some stronger inflation numbers and the rest of the central banks are cutting rates, I actually like that setup here. But I'm going to have to wait for Tuesday night for that Australian CPI report. And then we've got some reports on Friday. Again, any U.S. government report is unlikely to be released. So the core PCE price index is not likely to be released. They really got the CPI out. It was actually an effort to get it out and say, let's put everything else on hold. Let's make sure the CPI report comes out. It came out 2 weeks late, but it still came out. We do have Canadian GDP on Friday morning as well. But this is all about central banks. It's all about central banks this week. And it's really all about Wednesday and Thursday. So Wednesday and Thursday are likely to be the most volatile days. And if that is your style of trading, that's when you should be active. If you don't like to trade around central bank announcements, you should be looking to wind down your trading by Wednesday morning and then possibly pick it back up on Thursday afternoon. All right, let's get into all of the currencies and score them from +3 to -3. I'm going to zoom through crypto. I don't like cryptos as a whole in a basket, and you'll see when we get into the individual charts, it's the same thing. We've broken below the 20 and 50-day moving average. We're low basing. Every single breakout is a false breakout. No thanks. See the same thing on Bitcoin Cash. Again, no thanks. Look at this. Tuesday, you could have been fooled into that candle there, and by the end of the day, it had given it all back up. I am not looking to chase anything here because these wicks scare me. These wicks are telling me, hey, it's not ready to go yet. I need candles like this over here. This is telling me, hey, you know what? It's got a trend going. This is telling me, nope, don't get fooled. Do not get fooled until we get some nice candles here. And then Litecoin isn't even moving enough to make it interesting. So this one's not giving you any false breakouts, but it's just flat, just not doing anything. So for me, cryptos are absolutely not worth looking at or trading until we get some better movement. Okay, biggest through the Forex markets. Start with dollar.
Absolutely. Well, let's just start with, talk about a little bit of dollar because, like Rob said earlier, I think dollar is just at a very unique spot here because everybody is sort of saying, like, if the markets are so aggressive in rate cuts, then why the yields are holding up and why is the dollar holding up? And that's a good point because, when we look at last year, things are very much correlated. We saw, the expectation dropped and we saw the market, everything sort of were moving in tandem. And right now we are not really seeing that. So this is where there's more risk for an upside correction rather than a downside because, let's just say that, and today's a great example. Today we had the CPI numbers. And initially we saw a bit of a pullback in the dollar and the yield, and they just snap right back up. Now, going back to the exact same thing we discussed is the price action. Now, by a textbook, you would think that this should go down, but it didn't. So I think this is where there's more legs to it. I don't love dollar as a short at all. I do like dollar on dips, but as you can see that we are in this little data vacuum where we just haven't had much data because of the government shutdown. And as we get more and more data, I think that is where there could be a surprise shock as well. If the economy is doing a lot better, I think then there's a chance for correction where markets are expecting now, 2 to 3 rate cuts. Even for January, the expectation are up at 52%. So I think there is a mispricing there, and if there is a correction, I think there could be a big move. But I think that one I really like based around the data. But for now, you can see that it's just consolidating. It's about the 20 to 50. It's just in a consolidation phase. So want to be cautiously, bullish on this one. I don't love this as a short. I think trend scores is telling us to be on the long side. Now, when we talk about comparisons, and why would I like dollar short when I have a yen that is just acting beautifully? And last week I talked about this, and so far you can. This was again one of the best calls we had so far last week. Is where yen it was a nice reversal off the bear rally. I know this rally went a little bit further, but I mean, we talked about last week where we had that pretty nasty reversal candle. And then pretty much we look at the breakdown from that, and we have been going down and down from there. So at this point, we are likely to retest that prior support, but I still like this more to the downside than I do like on any sort of rally. I think any rally is likely to be shorted. We get the Bank of Japan next week, but again, price action wise, this is a clear short to me. Now, when you look at some other currencies, and you can see where Swiss franc, it goes to the same thing as a dollar. I don't love it as a short, but I don't really love it as a long because things are just consolidating. So I don't really love the Swiss franc here. It's just in a consolidation phase. Now, when we go to the euro, well, euro have been sort of lagging a little bit behind the Swiss franc, but overall, as you can see, it's still supported by the 20, the 50, and even look at the percentage change. That window that you're looking at is such a small percentage historically. So at this point, don't love that on any strong direction either way. Now, British pound is the one that I did pivoted early this week when we had that CPI number. As you can see that this thing is now officially below the 20 and the 50-day moving average. And you can see that the price action all week on a velocity, it did break down, had a bear rally, broke down, a little bear rally. So what is it telling you is that, look for those bear rallies to short into. You can see it was a pretty nice trade throughout the week on the short side. So I still like this further to the downside next week as well. Again, in comparison to Euro and Swiss franc, I think this is where there could be a next move. Now, we talk about fundamentals, and again, pound is fitting in very nicely for a little weaker fundamentals with even a lower than expected CPI. Now, CAD, on the other hand, is the opposite. Last week, or early this week, we had the Canadian CPI, and there was a surprise jump. All the numbers were running hotter than expected. So I think this one, again, from a fundamental perspective, I know we have a rate cut coming for Bank of Canada on Wednesday. But I think once we get past that, I think that we definitely finally liking the Canadian dollar to the bit on the upside. So as you can see, the trend score got better this week. And as we break above that resistance, which looks pretty clear, I think if you break above the highs there, this thing definitely has a bit more of a chance for run. And secondly, we talk about correlation, and dollar has and the CAD is mostly tied. They kind of go along the same line. Sometimes they do deviate. I feel like at this point, we are getting to the point where there could just be equally performing well. So I do like CAD to the upside going to next week, especially past that Bank of Canada rate cut, which again is already expected. But I think this is where once the news is out of the way, we could see a bit of a further move up to the upside. Now, when we go into the other currencies like Aussie, and again, I didn't really love the Aussie, and overall, you can see this thing, it doesn't look like the best long, but it doesn't look like a best short either. It's just stuck in that range. But if we just follow the broader markets, broader markets have recovered all that big down move that we had and now making new highs. So when we look at the chart, we can see that maybe it's lagging a little bit, but velocities you can see overall is holding up. So I think as the market holds up or continues to push higher, we could see Aussie perform a little bit better as well. But again, I think the price is likely to be muted. But I think in comparison, I really like Kiwi for the first time because, we have seen lower low and lower highs. And this time around, we did break that support and we are now above that support. And for the first time in, I think, almost 3-4 weeks, we're getting a better score on the Kiwi. So we are in between the 20 and the 50. And I think we could see a bit of a chance for rather, have a bit of a chance to go up, retest that 50-day moving average. So I know trend scores is 0, but now this is where we could lean a little bit more towards the right. So slowly we could see the Kiwi perform a little bit better. So that's what I've been looking into going next week.
Thanks, Ankit. Now, my simple rule that I follow is I only go long things that are above the 50-day moving average on a daily chart. So for me, the only currencies that are currently doing that is the Swiss franc, the CAD, the Aussie, the euro, and the dollar. So that's where I'm looking for strength. And I'm with you, Ankit. I think the pound and the yen both look like good shorts, and that's what their trend score says as well. Velocity, what's moving right now? Well, the strongest stuff moving right now is euro and Aussie to the long side and pound and yen to the downside. So that's definitely where I'm going to be looking is euro and Aussie on the long side, pound and yen on the short side. Let's pair those up and take a look at them. Whenever I have two currencies I'm not sure about, hey, I like both euro and I like Aussie, pair them up. Pair them up against each other and see which one is actually acting stronger. So here we have euro Aussie, and you can see for the last 5 days, euro Aussie has been drifting lower, which tells you that the Aussie has actually been stronger than the euro. Right now, over the last, let's call it 16 hours, it's been totally flat. That moving average has totally flattened out. If this moving average starts to trend higher, then all of a sudden it's telling me that the euro has been stronger than the Aussie. But for right here, right now, it's telling me that Aussie is likely the best place to be on the long side. Then I have two currencies that I say, hey, you know what? I like them both as shorts. We'll pair them up. This is pound yen. You can see pound yen has been going higher, so that tells me pound is stronger than yen. So my best place to go hunt at the first of this week is Aussie yen, and right away we just get a beautiful looking high base pattern on a 4-hour chart. Let's take a look at it on a daily chart. You can see on the daily chart, we're in a nice uptrend on a daily chart as well. So this ticks all my boxes for what I'm looking for. I've got nice candles. Again, these candles are unlikely to get stopped out. We have a nice movement without big pullbacks. I go into my 4-hour chart and I'm seeing this really nice high base, break up higher, high base. Question is time. When does it break out higher? And I'm ready to go right now. So I think anywhere above this 99, let's get a 99.60, 99.60 above this parabolic SAR would be a nice entry point. As far as targets go, we go all the way back up here to 150, probably where the next bit of resistance is, somewhere in this 130, 150. That's giving us, 80 to 100 pips. That's a 1% move. That's what I like to see in my trades. I like to see the opportunity to make at least 0.5%, if not 1%, telling me there's enough meat on the bone for this one. So this is my favorite trade here of the week, Aussie yen. Could you take a look at, pound Aussie? Sure. And if you determine that at some point the pound is weaker than the yen, then this is going to be the place to be. Daily chart looks okay on a daily chart. Not quite as good. You can see though, we are getting a little bit of a breakdown on the daily. It doesn't look as good. So Aussie yen is definitely my favorite here. Especially if you're looking at this, this is a decent pattern here on a 4-hour, and you can see, hey, you want to get in on a rally. Bear rallies look to be the place to get in. So let this thing do a bear rally up to this, we'll see where it goes to. But let this thing move. I like shorting this one here on rallies. Okay, what do you want to take a look at?
Oh, great calls, Rob. I definitely have a few of them here as well. Dollar yen is the first one. Again, this goes back to setting up trades, and especially around news events. And I feel like next week, as we get the FOMC and the press conference, remember last month was a huge mover off of that press conference. So I think there's still an opportunity if the Fed is less of dovish than what market's expecting. There's a chance for this to run, and this is again a beautiful setup, getting up to the resistance level, the prior resistance on the daily chart, and then 4-hour chart is again same thing, lining up really well. So I do like this one, and again I will be looking at this primarily around the FOMC press conference. Now, same thing goes. Pound dollar is the other one that I'm also taking a look at. Again, we're just setting up trades where we can, potentially looking for some bigger moves. And now, same thing on a daily chart. This is just, again, a beautiful little rollover here. And again, from a risk to reward perspective, I do like this, especially getting down towards that 32 to 31.50 area. So again, this will be another trade I'll be looking at for the FOMC. So again, next week is such a busy week that we need to sort of concentrate on what events we're looking at, where do we think there could be a bigger move, and then set it up accordingly. So these two ones goes on the top of my list. Pound CAD is another one that I'm also closely keeping an eye on. And again, that's after the Bank of Canada rate statement. You can see beautiful bearish sort of a candlestick today. You can see this one again had a rally. We retest that prior support, now the resistance, and now it looks like it just wants to go lower. And again, from a risk to reward perspective, beautiful. Now, remember the way we look at the price action, bear rallies have been a good opportunity to kind of short into. That's just the way pound is moving. So that's something I'll be paying close attention to next week. And the last thing I want to pull up is Aussie Kiwi. And this is a trade that I've been looking at early in the week when we get the Aussie CPI. But we already had the number from Kiwi CPI. And again, if the Aussie CPI comes in as strong as we had the Kiwi, we probably see Aussie Kiwi kind of continue to do the same. But Rob, if you want to take a look at the daily chart, I just want to point out that this was such an easy trade on a daily chart because you can see that divergence that took place all summer. Now, if you take a look at that divergence, we made a little double top and gone into this consolidation phase. I think this is where it's at a bit of a decision moment. 114 area is a very strong level of resistance, but now going to next week, if the Aussie CPI comes in a little weaker compared to the Kiwi, I think there could be a reason for correction. And I think based on risk to reward, that one fits up very nicely as well. So next week, tons of data. We just need to start focusing on those currencies that are likely to move. And as the week progress, we will be looking at individual currencies. So looking to be very active, going into next week. So that's my plan, Rob.
As Ankit said, it is a busy week, so let's all be on our toes. Should be some good movement. I do like trading this week. I think it's a good week to be trading Forex. I don't think it's even worth your time to be checking in on cryptos. We'll talk about that next week. Everyone have a great weekend. Goodbye, everyone.